Hello and welcome. You tune into Market Fatafat, show where we take you through all the stocks that are in focus today, either on the back of news flow or on the back of technicals. I'm Ankita Saxena and with me is Snehi Shah. But before we get started with the show, let's take stock of how the markets are faring right now. Well, market, we did open up, above those 24,200 levels, within the previous range. And Nifty is fairly range bound these days. In fact, right now, we have given up those gains, all the morning gains. It is hovering around its day's lowest point. And Nifty Bank is also, at the day's lowest point. It's down almost 500 odd points.
Absolutely. So viewers, hello and welcome. Big market cuts coming in. It's a deep shade of red across the markets. If you take a look at Nifty, it's 1.1% lower from the day's highest point, currently below the 24,000 mark. If you also take a look at what Sensex is up to, Sensex also 1% lower. You have mid cap and small cap. The broader markets are also not holding, not providing much strength to the market, rather also subdued, and more than a 1.5% cut, in fact, coming in from the mid cap and small cap indices from the day's highest point is what we're talking about. Nifty Bank also lower by 1.7% from the day's highest point. If you take a look at the fall right now, 1.2% lower is where the Nifty Bank is, but currently above that 51,250 mark. Let's see if it can hold on to those levels. However, on the back of these drastic market actions that we're seeing, you have India Wix that is up 2.4%. So that's a slight point of worry that we wish to highlight. If you take a look at some of the sectoral gainers and losers today, you do have some pockets of value still managing to hold on to the green, the likes of Nifty Realty and IT. These are your only two sectors that are managing to hold on to the shreds of green. However, on the flip side, you have Nifty Auto, your biggest sectoral loser today, 1.6% lower. Remember, yesterday, banks and financials did pretty well in trade. Today, they seem to be reeling under a lot of pressure because you have Nifty Financial Services, Nifty Bank, as well as Nifty PSU banks are deep under pressure today. More than a 1% cut coming in across all three of these indices. Nifty FMCG, Metal, Energy, Media, Pharma, all of these also reeling in the red, reeling under some pressure. So lastly, that's what the market is looking like right now. Nifty heavily under pressure, 0.7% cut on both Nifty and Sensex, and below 24,000 is where we are on the Nifty right now.
All right, let's get started with the show then. Let's invite Foram M.Chheda, who's the founder of ChartAnalytics, on the technicals, and from our research team, we are joined by Ria. Hi, thank you so much to both of you for joining us. Let's get started with all the stocks that are buzzing in trade today. First up is Hindustan Copper, which is an earnings candidate, and let's look at the results first. On the as far as year-on-year results are concerned, we did see a profit jump in the net profit of at 101 crores for the second quarter that ended in September 30th. The revenue from operations surged 36% to 518 crores versus 381 crores in a year ago period. And at the operating level, the EBITDA was up 25.4% to 151 crores in the second quarter of this fiscal, over 121 crores in quarter two of the previous fiscal. The EBITDA margin stood at 29.3% in the reporting quarter versus 31.8% in the corresponding period of FY24. But why is the stock reeling under pressure? It's trading with cuts of 0.5% right now because we had a weak sequential number. Revenue was marginally up 5% sequentially, but there was a decline in profitability. PAT was down 10.3% on a quarter-on-quarter basis. EBITDA was down 19.4% sequentially, and EBITDA margins also contracted significantly at 29.3% versus 38.2%, down 888 basis points on a quarter-on-quarter basis. And on the back of that, Hindustan Copper is reeling under pressure with cuts of 0.5%.
Okay, while Hindustan Copper is under pressure, let's also talk about another stock that seems to be under pressure over the course of time. Foram, actually. Hi, welcome to the show. You've picked out IHCL. Now, take us through what the charts are looking like for IHCL. What's your outlook going ahead, and what are the levels also that you are spotting for this one?
I'm sorry, I didn't get the stock.
Indian Hotels, the stock that you picked out.
Sorry.
Yes.
All right. Good afternoon, and thank you for having me on the show. If you've seen, Indian Hotels has done monthly, or rather I would say from the past couple of months, decently well. So in fact, the stock did give a technical breakout in the month of August, and then that was at the levels of around 650. And then it moved up by another 10% and formed a high of 720 in the month of September. However, after that, we did see again a bit of retracement, and along with the markets, the stock price also had seen a bit of a decline, which is more of a broad consolidation. It tested the previous breakout of around 650, And now we have seen the stock prices move above those levels, and it has been seen a lot of increase in volume also. Since the price breakout is accompanied by a very good increase in volume, indicates the stock is quite bullish. So we had seen currently, or even yesterday, the stock price was marginally down. Today also it's little subdued. However, I would suggest it's a good buy, or an attractive level to buy would be around 720 with a stop loss of around 705, and can look for a higher target of 775. It's more like a positional, you can say 1-2 month holding period, but stock has been outperforming relatively.
Foram, thanks for that. That's the outlook coming in on Indian hotels. Let's talk about the big nifty loser today, and that's Britannia. Remember, the stock was lower by 2% on the back of earnings reaction, but it has slipped much further after the earnings con call that took place. But first, let me run you through what the numbers look like. You have revenue that's coming at 4,668 crores, which is up 5.3% year on year, and largely in line with what we were expecting at 4,769 as well. EBITDA, however, has come in at 783 crores, down 9.6% year on year, and a miss on our estimates of 893 crores. Net profit also 531 crores versus our estimate of 630 crores, so big miss on that front as well. EBITDA margins have also shrunk year on year at 16.8% compared to 19.7%, also another miss on what we were expecting. However, the consolidated sales are up 10.3% year on year, and what the management indicated is that volume growth has been roughly 8%. Now, we were expecting this number to be between 10 and 11%, so it's a slight miss coming on that front as well. They're pointing to severe commodity inflation that has seen the slowness in demand in urban areas across a range of FMCG products. But while this was the earnings reaction and this was the earnings first take, the reaction was the stock was roughly 2% lower. But let's also go across and listen to some management commentary coming in from the Britannia board on the price hikes, volumes as well as market share, and understand what really led to the stock falling further in trade.
There will be about 4 to 5% price increase in the next 2 quarters. So that we'll have to take, and we will do it strategically in SKUs where we haven't taken a price for some time. But if we have to take 4 to 5% on our entire portfolio, it tends to hit the large SKUs and large brands. So we are in the process of doing that. It will be gradual, but yes, wherever we can, the price increases are, if it's a direct price increase, it'll be taken right away. But I would say December, Jan, we'll be done.
All right, that was the management of Britannia. But another stock that is in focus today is LIC. After posting some good set of results, we have an upgrade coming in from the brokerage. Ria, tell us, what does the brokerage note say?
Yes, so JP Morgan has come out with a note on LIC post the good set of earnings that they reported in Q2 of FY25. Now remember that they had posted good growth on the VNB front, and on this front, JP Morgan has upgraded the stock to an overweight from their earlier underweight rating, and they have hiked the target price to rupees 1,075 from the earlier rupees 790. Now they have said that this double upgrade is on the strong VNB growth from the enhanced product mix, and the growth is likely to remain sustainable going forward. They've also revised the VNB forecasts for FY25 and FY26 by 9% and 11% respectively, and they have said that they continue to outweigh the negative impact from the higher product benefits and lower bond yields. And reacting to this bullish note coming in from JP Morgan, the stock was up around 3% in early trade today. Right now it has given up some of those gains, but it's still trading with gains of 1%.
Okay, so that's the outlook on LIC. That's the reason why the stock is in focus today. But Foram, you've picked out NBCC on the charts. Now, if you take a look at the year-to-date performance, the stock is up 73% already. Recently, last 1 week, 1 month, we have seen some consolidation in the stock price. So tell us, which direction are you expecting the stock to head in, and what are the key levels to watch out for?
Well, if you look at the overall stock now, recently we've seen more of the stock just remaining and consolidating. It's a little quiet. But at the same time, if you talk about the volumes also, there has been a little comparatively decent volumes, but it's showing signs of more accumulation. Now, after the split that has happened maybe a while back, we have seen the stock price seeing pressure after the split, but now it's forming a base. There is an indicator like RSI, which is indicating more of a positive divergence, which means that the stock price which is falling But the RSI is now trying to build up some strength and now it is forming higher bottoms. So there's a very big positive divergence. Where the volumes are concerned, it's more accumulation happening. So it's forming its base. So according to me, it is a kind of one should be holding on to it and kind of look for levels of 88 to consider accumulating or even buying a smaller quantity, just maybe like a 25% of the total quantity that they look at buying. Because the risk reward ratio is turns out favorable, a very strict stop loss can be placed below the levels of around 83 and can look for a rebound for the stock towards the levels of around 110. So overall, I am bullish, but at a lower levels that one can look at accumulating.
All right, that's NBCC on charts. But now we're joined. Now with that, it's time for us to slip in a short break. Don't go anywhere. We'll be right back after this break. Welcome back. You tune into Market Fatafat, where we are taking you through all the stocks that are in focus today. Well, let's go across and see what are the stocks that are buzzing away. Well, ONGC is a name that is in focus today. In fact, the stock was up 2% in the morning trade. Seems to have given up those gains. Has currently cooled off those gains. Is trading with gains of 0.3% right now. And this rise came in after the company reported its profit, which was up 17% annually to 11,984 crores in the September quarter, as against 10,238 crores in the September quarter of the previous financial year. Although the company's gross revenue, we saw a downtick in the revenues, which dropped 3.6% on a year-on-year basis to 33,881 crores in quarter 2 of FY25 from the 35,162 crores in quarter 2 of FY24. Now, with a focused approach and continued trust on increasing domestic production, ONGC has been able to reverse the declining trend in crude oil production, and that's the word coming in from the management of the company. And also, if you look at the standalone crude oil production during quarter 2 of FY25, that stood at 4.57 million metric ton, reflecting a growth of 0.7% as against the same quarter in the previous fiscal year. Also, on the gas production front, ONGC has been able to arrest the degrowth and the decline, which was 3.6% in quarter 1 of FY25, over quarter 1 of FY24 has been brought down to 2.1%. On the back of that, ONGC is in focus today.
Okay, so that's the reason why ONGC is in focus. But Foram, we'll come to you for your next stock, and you've picked out Rainbow Children's Hospital for us. Give us your outlook on that stock. What are the levels that you're spotting?
Well, if you look at the stock has been outperforming comparatively to its benchmark. Now, if you talk about a little more historically, the stock had formed a high of around 1649 in the month of May this year. And after that, it saw quite a lot of decline towards 1000 levels. Now, post that was in the month of July. After that, we've seen a very gradual improvement. The stock price moved above the multiple moving averages of like 50, 100, 200 as well. And now has been trending up very well. Currently, the stock has moved back to its previous highs of 1649 to around 1650. In fact, it went up higher also a few days back. That is at 1,688. And even today, we see the stock price is up by around 3%, whereas if you see if there's an outperformance comparatively, and since the Nifty is down by nearly around 0.9%. If you talk about the volumes also, there has been excellent volumes from the past couple of months, and with every notch higher, or I would say at every breakout from its resistance, there has been a very exceptional increase in volume. So that is supporting the breakout, as well as we can say there is accumulation happening. Even an indicator like RSI is supporting its entire. So according to me, it's a good buy at around 1600 levels with a very strict stop loss at around 1539, and a target can be expected towards 1750.
All right, with that, it's time for us to go across to the management of Hindalco that's joining us now. Satish Pai, who's the MD, Hindalco Industries. Thank you so much for joining us today. Well, tell us, Hindalco India's operations have reported better than expected set of results, with Aluminium India upstream EBITDA per ton at $1,273 per ton, which is highest in the last 10 quarters. Do you expect that sort of a resilience of India aluminium operations to continue going ahead?
Yes, I think that the India business results, I expect the sort of good trend to continue, largely because I think the demand is quite strong. And the second thing is we have very stable operations and our input costs are under control. So these two will help us. The LME is also expected to remain at that about 2500 levels. So yes, we expect the strong Aluminium India results to continue.
All right, sir, thanks so much for that outlook. But I want to draw your attention to Novelis as well, because Novelis, meanwhile, although numbers were steady, the outlook on demand was weak. Help us understand why there is why there is divergence when it comes to both of those. Is weak automotive demand a major concern, and which geographies are impacting global demand the most?
So I think that just to clarify, the sectors that Novelis operates in, the largest sector is can, which is packaging, and the demand for that is extremely strong. The aerospace, which is another sector, the demand for that is very strong. On the specialty side, the market with lower interest rates is coming back. The auto picture is a little bit nuanced because the US market is quite strong. It's only in Europe where we had the Sierre plant flooding, which impacted our shipments to the auto sector. And to be fair, the auto market in Europe is a little bit weak. So the only real place where we are seeing weakness in the auto market is Europe. US is quite strong.
Right, and also speaking of Novelis, what about Novelis's IPO? You postponed that, in June this year, citing weak market conditions. How soon do you see the market conditions becoming more conducive?
I think we'll have to wait and watch. As you said, we want to make sure we get a premium valuation. So we will look at the market conditions, and we will also make sure that the Bay Minette project by middle of next year would largely be de-risked, because majority of the contracts, etc., would be given out. So hence any worry whether we will hit the 4.1 billion budget and the timeline will also be gone. So we think that once the Bay Minette project is de-risked and the market conditions good look, then we will be back into the market for the IPO.
So, Mr. Pai, would it be fair to say that the Novelis IPO will be completed in FY26?
I think we'll have to wait and watch.
Okay, well, you have also withdrawn. Withdrawn short to medium term Novelis EBITDA per ton guidance due to jump in scrap prices. What really seems to be the problem here, and how soon do you expect the trend of rise in scrap prices to reverse?
Yeah, what has happened is that China has taken away some restrictions that they had on scrap coming into the country. So what has happened is that there has been a lot of Chinese buying of scrap from many of our normal places like Mexico, US, Europe, which is why the demand for scrap suddenly jumped up and the scrap spreads tightened. Now, we think this is probably going to last a couple of quarters, which is why we said that we would not we will pause the guidance on the EBITDA per ton for Novelis. I expect this to last a few quarters.
Right. Also, now that you're confident of commissioning the Bay Minette at a cost of $4.1 billion in the second half of FY26, is the rising capex cost no longer a concern at all?
Yes, as the current date, we are quite confident that we will meet the 4.1 billion target.
Right. Also, you in your on your call yesterday, you had announced a capex of $4 to $5 billion over the next 3 years for upstream projects in India. Help us understand what really is this capex really meant for?
So let me tell you. So we already announced projects. We have an alumina refinery and a copper recycling plant. Now we are also launching an aluminium brownfield smelter expansion in our Aditya and a copper smelter expansion in Dahej. Both these projects are about $1 billion each. So we have announced another 2 smelters, copper and aluminium, at $1 billion capex each. So with that, our total guidance now comes to about $4 to $5 billion over the next 3 years.
Mr. Pai, while that sounds good, could you help us understand how all of these expansion plans of yours will be funded now with your consolidated debt already at 36,000 crores, and since Novelis in India capex is also lined up, how much could debt inch higher going ahead?
So look, the two balance sheets, we keep them very separate. I think Novelis's balance sheet is going to be funding their Bay Minette project. The India balance sheet is going to be funding the 4 to 5 billion that we require in India. Now in India, we are net debt negative. We have about 12,000 crores of treasury, and we are generating a lot of cash. So I think over the next 3 years, we will probably have to borrow maybe $1 billion to $1.5 billion more, going to depend on our cash generation. But the India balance sheet net debt to EBITDA is negative right now and can easily handle the 4 to 5 billion capex that we plan over the next 3 years.
Right. Mr. Pai, so if and when the Novelis IPO goes through, how will the proceeds be used by Hindalco then?
No, I think that last time we had done it, we had said that we would dividend it out to the shareholders. I think now when we go out to the IPO next time, we will then take a look at what we do.
Okay, thanks very much for joining us on the show and on ET Now, Mr. Pai. Thank you so much for joining us. So that was Satish Pai, MD at Hindalco, giving us a sense of what the growth and the expansion plans going ahead could look like for Hindalco as well as Novelis. But on that note then, viewers, let's keep it going with all the big buzzers in today's trade. And let's talk about a big buzzer then. Jubilant Foodworks is a stock that's doing really well in trade right now. And it's actually surprising the kind of knee-jerk reaction that this stock has seen on the back of a poor set of earnings operationally. If I take a look at the operational numbers, it's a miss coming in on the top line and the bottom line both. The revenue is up 42.8%. However, the net profit is down 34.2% and EBITDA margins have also shrunk at 15.8% versus 20.3%. So why is the stocks soaring in trade, you may wonder? That's on the back of a positive surprise of the same store sales growth coming in at a positive 1.5%. Remember, this is a segment, the QSR in general, and for quarter two largely, the peers have been reporting a negative high to single-digit negative decline coming in the SSSG, and Jubilant has given a number of 1.5% on the plus side. So that's a big positive that the street is also reflecting. Domino's is another growth lever for the company. Domino's like-for-like growth is at 2.8%. Delivery growth is also at 11.4%. So brokerage is also giving the stock a thumbs up. Nuvama has upgraded the price to 631. Motilal Oswal target price at 625, and HDFC Securities 650 rupees per share is the target price.
All right, moving on to another earnings candidate. We are in the thick of earnings season, and another earnings candidate is TVS Supply Chain. Coming to you, Ria, tell us what's the number. What does the number look like for TVS Supply Chain then?
Yes, absolutely. So TVS Supply Chain has reported quite a good set of numbers in Q2 of FY25. We've seen the revenue increasing by around 11% on a year-on-year basis. Even the net profit has seen a significant jump. It has come in at 11 crores in this quarter versus a loss of 41 crores in Q2 of last year. On the EBITDA front, we've seen a slight decline of around 8.5%, and the margins have also gone down by around 146 basis points. But during the quarter, the company did win a significant new contract in excess of rupees 2,200 crores with a large industrial customer in North America. And in terms of the outlook for FY25, the management has said that they expect the ISCS momentum to continue in H2 of FY25, which is going to be supported by a healthy pipeline and continued focus on the margins. And in terms of the network solution segment, they have said that they are going to focus on improving profitability in H2 of FY25, and they are expecting a target run rate profitability for the IFM segment in H2 of this year. So positive outlook coming in there, and on the back of this, the stock is up around 2% right now.
Okay, so TVS Supply Chain holding up to some gains in today's trade. On that note, Forum, we'll come to you. You've picked out the stock Tejas Networks for us. If I take a look at the YTD chart of this stock, it's already up 51%. Tell us if you expect this momentum to sustain going ahead. What's the outlook, and what are the levels that our viewers should watch out for?
Well, Tejas Networks overall, if you say year to date, absolutely has done very well, and I would say pretty well enough. Now, in fact, the stock price had peaked out at the levels of around 1480 to around 1490 in the month of July, and then we saw the stock price in a decent corrective decline. This decline also found its support near 1,100 levels, and it has tested these levels of 1,100 multiple times before it showing some signs of again bullishness. Now this bullishness came into the picture, that is last month, and after that, that was I think during the result announcement, and then we did see a good momentum picking up. Now the stock price is consolidating at a higher level, and which is indicating that there is some more, I would say, a bullishness overall into the stock, because there has been very good increase in volume, and this substantial increase in volume is not happening in the past since its results. So overall, the stock, the volume has been supporting very well along with the price. So it looks very attractive to buy towards the levels of 1300 to around 1290 because there is multiple support of moving averages like 50 as well as 100. And from an investment perspective, also one can consider accumulating or start looking at investing in smaller quantities. A very strict stop loss is recommended at the levels of around 1195, and I'm looking for a long-term potential target of more than 1550. So overall, the stock is very safe to start looking at accumulation.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you some more stocks that are buzzing away in trade.
If you like this video, then like, share and subscribe to ET Now.